Okay guys, so in this video we are going to explain how you should prepare asset disposal. Actually, we need to start by explaining or try to give some basic on what is asset disposal. Okay, when we talk about an asset disposal, guys, know that a company or a business sold an assets. If company sold an assets, guys, we need to prepare what we call asset disposal. So the main purpose to calculate an asset disposal, we want to see whether we have made a profit or we have made a loss when we sell a second-hand asset. Okay, so this is the format that you need to use when you prepare your asset disposal. However, you can see this side is a profit on sales of assets, this side is a loss on sales of assets, but it doesn't mean that you have to write both of them. You have to get at least one. You can't sell by profit and loss at the same time. You're going to make a profit or you make a loss, okay, at a time. So number one, you must start by a cost price of that assets that you sold. If it's a vehicle, you need to write a cost price of vehicle. This side you need to write accumulated depreciation on the date of an asset that has been sold. Okay, on a date of sales, you have to use a date of sales of accumulated depreciation, because you will find that sometimes they give you accumulated depreciation at the beginning of the year and they sold an asset during the year, which means that you need to calculate further depreciation and you add them together. So bank or creditors control simply means that we sold it in cash or we sold it on credit. Okay, this side is a balancing figure where you are going to check which side is higher than the other side. Okay, now let's do our practical example. Then use the information extracted from the account record of George Traders to prepare the following account in the general ledger. Okay, so for this video we're going to focus only on asset disposal. Okay, then they said balance or close off the account on 29 February 2016. To close off balance, guys, is to do balance brought down. Okay, but when it comes to asset disposal, we don't do that. We can't close off a loss or a profit. Okay, now let's read the information. On 1 March 2015, the following balance appear among others in the books of George Traders. We are not going to use those balance. And when we proceed, number 2, they said on 31 August 2015, a vehicle with original cost price of 180 was sold on credit for 100,000 and accumulated depreciation on this vehicle on 1 March 2015. As you can see here, they give us accumulated depreciation on 1 March, but it has been sold on 31 August 2015, which means that we need to calculate further depreciation. Okay, and they said the accumulated depreciation on this date of 1 March, it is amounted to 160. Okay, let's first record what is available. Number one, what is available is original cost price of 180. 180 is here of cost price. Okay, and another one, 100,000 for credit, which means that we have to remove bank because it's creditors control. Okay, and the amount is 100,000. 100,000. Okay, and we have 60,000. This 60,000 is for accumulated depreciation, but it's not complete because it's up to 1 March 2015. We have to calculate another depreciation from 1 March until 31 August, the day that they sold this vehicle. Okay, it's gonna be how many months? March we're going to count because it's on the 1st. March, April, May, June, July, August. It's 6 months. Okay, and they said on number 4, they said that depreciation is provided at 20% per annum on diminishing balance method. Okay, simple means that what we are going to do is to calculate a diminishing balance that we are going to add here. Okay, let's calculate. Let's check the cost price. Remember, if you are using diminishing balance method, it's a cost of 180 minus accumulated depreciation of 60,000, which is going to give us 120,000, multiplied by percentage is 20%, and we multiply by 6/12. We are going to do pro rata because it's only 6 months. Okay, then if you do this on your calculation, 120,000 multiplied by 20% multiplied by 6/12 is going to give us 12,000. We add 12,000, then it's going to give us 72,000. Now let's check which side is higher. Obviously this side is one which is higher, because this side is going to give you a total of 172, this side is 180, which means that we're going to balance with 180,000. Okay, which means that the difference is how much? It's 8,000, which means that they sold it at loss. There is no profit that has been made when they sold this vehicle. So I hope you learned something. Please check part 2, which I'm going to do. Remember this one, there was no any trading. So part 2, we are going to do a question paper that was an asset that was sold on trading. So thank you so much for watching, guys. Please don't forget to like and subscribe and follow us. Keep watching our videos so that you can learn more principles.